Ladies and gentlemen of the crypto space, we're live on a Thursday, September 30th at 2:17 p.m. It's the end of the month or the beginning of the month, however you want to think about it, but the markets look extremely heavy. Sentiment has been lost. Momentum surely has been lost. And fear and doubt are pervasive in the markets. Now, the question that everyone's thinking about, or maybe they're not thinking about it, but they should be thinking about it, is what does that mean? What is to be done? What actions can be taken? What is the rationality and the logic and how you could think about what is about to unfold over the coming months? I mean, government just passed some funding so the government itself could stay open. They could get their paychecks, so on and so forth. But the debt ceiling is still an issue. Clearly, we could all come to conclusions about what they're speculatively going to do, what they're likely going to do. I mean, it's really a binary option, as Luke Roman points out very nicely. Either they allow the deflation to occur, they default on debt, it destroys capital, and the entire system crumbles to the ground, or they do what they always do is kick the can down the road. But how does that reality have an impact on the choices that we can make today? You know, if you're fearful about the dollar denominated value of asset positions, you know, the only thing you really can do is turn it into a stable position that isn't affected by the deflationary pressures in the market. Is that something folks want to do? Sell assets for stables or even sell assets for dollars? The honorable dollar, the respected dollar. Oh my goodness. Is there any respect left in the dollar? Is there any honor left in the dollar? So I have my thoughts, and obviously there's the choices that you, all of you, as well as myself, are presented with is the notion of liquidation or the notion of holding assets through deflationary periods. And what comes to my mind, first and foremost, is the value that you've allocated to the crypto space or whatever market for that matter isn't your overhead. It shouldn't be the money you use on a daily basis, the money you use to pay bills, to pay rent, to pay your mortgage. We work. And if you're not working, you probably shouldn't be investing and you have bigger complexities to deal with. But if you're working, you're getting your salary, getting your paycheck, and you're using that to pay your bills. So you're good. So the question is how to think of capital that you've allocated for savings and retirement, and really what kind of time horizon you have, and where you think the future is going to be, and what are the benefits of not necessarily liquidating. You know, one, you're liquidating because you're giving into fear. You fear losing money that you don't need in the short term. And that's an interesting reality. So let's look at some charts. Let's talk about our options. Let's think about time horizons. Let's think rationally, especially now that we're dealing with productive assets that will be printing money all the way down and all the way back up. Food for thought. ICDO 8C first. My man. Alexander, good morning, afternoon, evening, wherever you guys are. Ear ends in the house, stops in the house. Enoch, a pleasure. Igor, um, Foubert, I've been thinking about this hard as it relates to crypto versus precious metals versus fiat. I mean, you all should have a little bit of physical precious metals. You know, I still have a variety of assets in the equities market that I'm sure will be just fine over the next 10 years. I don't care whether the S&P looks like it's about to roll over or not. This thing looks horrible. Albeit, you know, from a technical standpoint, double bottom, 2 hours until close, wicking back up to the 100 SMA on the daily. I'm no technical expert, but the chart looks like crap, and I don't know where it's heading. No one knows whether or not it's going to go up or down. You know, the chart is a manifestation of market actor sentiment. Wicking both to the downsides is a Darth Maul saber. Um, they could very well hold, and the government could say, "Oh, we're going to mint the $1 trillion coin," and then everyone's like, "All right, party time, back on, let's go." We'll see what happens, or it could go down. And that what I like to remind myself is doesn't matter. The capital I've allocated to the crypto space and investments for that matter have a very long term time horizon. And the question ultimately that really needs to be asked is what is your time horizon and where do you think the market will be in that time horizon? And macro folks and maybe deflationist folks see all assets just getting pummeled and beaten up, and they're going to have their dollars and they're going to be able to scoop up assets on the cheap, and that's the Warren Buffett mentality. Fine and dandy if that's what folks want to do. We have that opportunity to do that as well. You can sell for dollars if you think the market's going to go down in the short term. And that's a capital gains route. You're liquidating now, you're going to probably have a capital gains implication for your portfolio. And then you're going to buy on the cheap and, buy and sell, price targets. Where is it going to stop going down? Where is it going to stop going up? I don't have time for that shit. I got time to think about these markets a little bit differently. I've been in this long enough that I want a different approach. Not necessarily for the most gains possible, but one, to respect myself, to respect my opinions of where I see the world, the macroeconomic landscape, where I see the global financial system heading, where I see technology that's incredible, awesome, disruptive, innovative, and exciting. I see people that are passionate and motivated, and they're working really hard. They're dedicated. And that means everything to me. That means more to me than the profits of the portfolio. And this isn't 2017 bullshit where you're just, I'm going to hodl it because it's an asset that goes up and down in value and it's going to change the world. It's like, you hold XRP and it's going to get, maybe the SEC settlement gets cleared and it goes all the way up to $100. You're going to sell it and you no longer have the XRP. You see my point there? It's not a productive asset. You literally have to get rid of it and sell it for it to do anything. And that's just means it's a flawed asset from a portfolio standpoint. It has no purpose in a portfolio. And that's really what the entire stock market has become in many regards. Unless you're just a vicious pirate, which my positions in the stock market predominantly are. Because there's no other purpose. You can't do anything. The assets have no dividends. There's nothing of excitement or interest from a productive standpoint. All they are is expecting people to pile in and bump the price up so you could dump it on them. And that, you have that in the crypto space, no doubt. Bessard, welcome to the stream. A pleasure. Dylan's in the house. Diesel, debt Ponzi scheme, maximum Ponzi. Killis is in the house, a pleasure. Mark, Wave, made a decision yesterday to exit Try Crypto Pool and Polygon and CVXCRV on Convex, into CVXCRV on Convex, particularly because I would expect Curve to outperform Ethereum and Bitcoin if we continue up. Well, inevitably we continue up. The question is, when's bottom? And that's okay. And I expect to lose money. Are you prepared? Are you prepared? Do you need this money? Do you have to make a mortgage payment? Did you bet rent on some assets, hoping for it to go up just to sell them? I mean, the whole point of everything we've been talking about over the last year and a half is to accumulate assets that produce income. The goal isn't to make a fortune. The goal is to replace your salary. If you make $1,000 a week, $2,000 a week, and you have assets that are potentially either now or in the future producing $1,000 a week or $2,000 a week, you just achieve financial freedom. So if you have to hold through a deflationary period to get to where you think the market's going to be in 1, 2, 3, 4 years, then you're respecting yourself and you're in pursuit of financial freedom. And that means everything. It means you don't have to sell, and it means it's okay to lose money. Everyone thinks, oh my God, I have to sell, I'm going to lose money. What if that's not a bad thing? What if that's okay? What if you're going to make money on the way down and on the way up? You think during bearish markets people aren't trading? And now it's such a different fucking market than 2017. You're capitalizing on transaction fees. I mean, there's yield and emissions constantly. Just if CVX CRV got cut in half to 30%, 30 fucking percent. It's an extraordinary number. This is a market that is nothing like 2017. You're not holding these assets because you're speculating that they'll appreciate in price such that one day you could sell them and dump them on the rest of the community. You're holding these assets because they work for you. The productive assets, dividend-bearing assets, unlike the stock market that has jack shit left to offer you. What's the point of holding an asset unless it's productive? And these are productive assets, better than the assets in the financial system, with companies that every seam of the financial system looks like it's about to unravel. And what happens when you have a financial system come apart at the seams? Alternatives are sought, new is sought, innovation is sought. You know, a lot of these companies and projects, the software in the DeFi space, these are basically companies. So call it crypto. You're allocating value to companies that have revenue and that are producing work. They're creating software and they're contributing to the GDP. They're producing. And to top it all off, they're producing for you. So it's a whole different narrative compared to what we had in 1718. And folks that don't see it from the legacy financial system, they may never. And they probably don't need to because they're probably wealthy already. But folks that need something that's new, innovative, that's actually productive, the crypto space is the place to be, in my opinion. Um, Creative. Greetings, Noah, from an island in the Mediterranean. God bless. You probably have a gorgeous view right now. So I can appreciate the complexities of various, financial systems around the world. Oh, but for the love of God, if you're okay and you have an income from a salary and everything that you have in investments is just investments, that's pretty good, especially if you have a beautiful view. So hope you have a beautiful view. Enjoy it, because that's what matters. Foo Bear, as long as all the front-running Fed governors have not retired, it will pop back up. Oh, those motherfuckers, they did that. And, you know what they did, because you can imagine what you may have done. And that's exactly what they did. That's some shit. ICD, a bit scared for my parents who have their life savings in their 401k. Well, this thing looks like it's about to roll over. A 401k is the last place I'd have any capital, at least, an IRA or Roth IRA. I rolled over all my 401ks to a Roth IRA. And actually, I rolled them over to IRAs, but that's besides the point. Point being, managed funds are pretty pathetic. You have no idea what they are. At least be in control. Got to be in control. You have to be able to make your choices based on your due diligence. You run your portfolio, not some schmuck in a suit. You need to know where your capital is allocated, why it's allocated, how long it's going to be allocated, and what the allocated capital is doing for you. Only then are you in control. This is my choice. It is my choice to watch assets depreciate. It is my choice to allocate to assets that I think will outperform the markets over the coming years. It is my choice to buy dividend-bearing crypto assets. Fascinating. I anticipate the Gov doing whatever is the most irrational, which is going to be print the shit out of money and probably transfer payments. We'll probably have some serious MMT type policies deployed. And they're going to do everything they can to preserve the vestiges of the old order. Keep the system functioning without disrupting it. The precious system, they don't want to meddle with what has worked. They are afraid. Would Fed Gov buy BTC? That's very speculative, my friend. Hey, Noah, random question. Do you have a crypto credit card? Yeah, BlockFi. How do you pick one of your choice? BlockFi is cool. I look forward to the Gemini card, and I'll probably just use Gemini once they come out with their card rather than BlockFi. I'll be at BlockFi. I think I have like $300 worth of Bitcoin already. That's pretty cool. Paul, well, I'm also tempted for a crypto debit card. Crypto.com works just fine. I don't use it. I use BlockFi. I rather my cash go through the bank account because then I have a very concentrated place to think about my tax obligations. Paul, hey Noah, I'm going to have an extra 100K to invest from selling my home. What do you recommend and how should I deploy it? Stable coins? Put them on Aave? and figure out what to do with it. If you can get 5% on your money, it's only $5 grand a year, but shit, you put it in a bank account, you're fucked. So at least you get 5%. And then as you get more comfortable with the markets, you throw it in a three pool or a MIM or a Frax pool on convex, and you get 10 to 30% on your money. And then those aren't volatile principal positions, and obviously you could consider volatility. And then your volatile principal positions are like here, are like curve, which, as you can see here, is pretty damn volatile. 330 down to 230. It's a 30% cut in price. It's pretty painful. You don't want to watch your 100K turn to 70, but maybe your 100K turns into 70 and then it turns into 150. Maybe then it turns into a half a million in a year. There's no perfect path, and there's no way to know how things play out. Um, but I'm feeling pretty comfortable with my position, and I'm prepared to watch it depreciate. I'll show you guys. So I've seen this thing down at 500. I've seen this thing up at 1.6, and now it's at 1.1. Talk about volatility. You can imagine the stomach or the tums I need to handle the anxiety. But I've watched this thing go all around, left and right, up and down, and now it's right in the middle. And let it do what it's going to do. It's a revenue producer. I have a nice capital accumulation. Arbitrum, I've been putting it inside of in a MIM position on curve, which is cranking out 35% of the money. So that's another consideration. You could have curve, MIM on Arbitrum, in curve, staked on Abracadabra, which is cranking out 35%. I mean, it's slow, obviously. It's 10 grand a year. I mean, it's nothing really to complain about. 10 grand a year pays my home's property taxes. So that's pretty cool. But it's also 22%. So here's Arbitrum on curve. If you go to the factory, so again, 22% on just transaction fees, 25% on transaction fees, plus the 33% incentivized return. So these stable coins are cranking out 58% yield. Clearly, there's a lot of considerations. Yeah, you're taking on additional risk, but risk is subjectively interpreted. The more you understand the risk, the less you fear it, and maybe even the less you think of it as actual risk. I don't really think of it as risk much anymore, especially knowing the developers and talking with them and how intelligent they are, and capable, and passionate they are, and what they're trying to achieve. Um, for the love of God, don't just jump into things. The last thing anyone should ever do is buy something because of hype or fear of missing out or someone else saying it's going to make you a fortune. Because if someone else says it's going to make you a fortune, the odds are you're going to lose a shit ton of money. Like some schmuck is going to say, hey, take that 100K and buy XRP, and XRP is going to tank 20%, and it's going to be pretty painful losing 20 grand unless you're an old school veteran of the space and you're used to the volatility. Because that 20 grand, if the market turns around, it's going to turn up real quick. So just don't follow blind faith. Never follow someone else's recommendations, someone else's expectations, someone else's advice. You need to follow your own advice, which means you have to start at your own pace, which means you have to start slow. How do you start slow? Stablecoins and Aave. Aave is a bank. It's been a bank. It is a bank. It walks like a bank and talks like a bank. It's a damn bank. So stablecoins and Aave, and you call it a day until you figure things out and you find your comfort zone, you find your conviction, you find your next step and your path forward. Crips in the house, Daniel, pleasure. Dylan, farming, Sal, Orca for 227 at the moment. Two assets, I believe, in double volatile pair. High risk. Expect volatility. You get 227. You get 227 on Avalanche at this point with like Joe and Tether. And dare you do like a leverage position with with Abracadabra starting to serve up, and quite excited for Popsicle to launch. And the odds are my stables are going to go in a Popsicle position to let those boys manage the capital. So that's exactly what they're going to be doing. And I very much look forward to that. So don't be tempted, everyone, for the double volatile pair that's highly incentivized. Um, so I appreciate the temptation for 227. I mean, like Joe USDT is highly incentivized because of Avalanche Rush and what's going to go down over there. But that itself, yeah, it's a dollar stablecoin, stabilized position, but it still can be quite volatile depending if how bad shit hits the fan. It's good to believe in assets, but just understand you're taking a risk because Sol is cool. I've never heard of Orca. Ryan, a pleasure. First time listener. We need more insights like yours, Noah. Yeah, I surely think about stuff differently. I hope it helps, guys. Um, Sean, hey Noah, what's your opinion on using borrowed money to hold stables to build curve spell position? Borrowed money. I don't take on much debt. Even with my interest in Abracadabra, that's predominantly because I want people that take on debt to pay me. I avoid debt at all costs. Um, unless I have complete control or like a very high, not just conviction, unless I have, very low risk profile, that's really only when I'll take on debt. So I don't have a high opinion of it, Sean. But I'm not necessarily the best person to ask about leverage. As long as your risk profile is low, it's considerable. And I've played risk, leverage on Polygon. Folks that have been around the stream for, when Polygon was hot, know what we did on Aave. And we took out a fair amount of leverage. So, could be done responsibly. But I've never been liquidated. Never been in a rug pull. I've never been in a hack because I don't want the risk. I just don't. Um, Enoch, so glad I found your channel. I have a degenerative disease. Oh, I'm sorry. I thought you said you were a degenerate, like a degenerate gambler. You have a degenerative disease, and now I have a good plan to get my money to work for me when I can. Yes. I think making capital work for you so you don't have to work for you. If you have a degenerative disease and you want to stop working for you, this is that path. There's no other way to do it. You're not going to do it with the stock market. Um, you're not going to do it with annuities or bonds or any of that shit or REITs or anything you can imagine. Nothing could do it. But if you could do it with the crypto space, and the whole question is risk profile and managing it and due diligence and structured portfolio where some of it's taking on maybe a little bit more risk so you get those outsized returns with the core of the portfolio taking on the least risk for the stable secure returns, stable coins, and that's the way you play the game. Now markets look very heavy. I expect appreciation, my friend. I know a lot of people are wanting to make fortunes, but I think that's the wrong mindset to have. The right mindset to have is to make something that's stable, reliable, and predictable, and to understand these markets. Um, this is not an honorable market. This is a perverted market that we're looking at right here. This is the S&P futures. But then you go over to the crypto space, and all I see is honor printed in the charts. The people working on the projects, honor and dignity and respect. That's what means everything to me. Alex, pleasure. Daniel, I got hired at a crypto company. My salary entirely in crypto. Any advice? Yeah, that's freaking awesome. Any advice? Give them a high five and say thank you. um, yeah, everything that we talk about, manage your risk profile and be smart. Expect depreciation and hope for appreciation. Wave, hit the likes, people. We can do better so others can listen to this mentality, even if you hold XRP. There's nothing wrong with XRP. That's fine. I think, XRPL, the ledger, is great tech. Um, and there's no reason you can't have a spec position be suited for that 1% play that I often talk about. In fact, the asymmetrical returns for XRP are monumental considering the narrative that they talk about. So 1% could turn into 50% of your portfolio if any of those price targets get hit. So you don't have a majority or even a minority of your portfolio in it. You have a fraction of a tiny part of your portfolio, which could potentially turn into a significant part of your portfolio. I talk often about XRP. In fact, the only thing negative about XRP is the community. Otherwise, the technology and the asset and everything else is FUD. And the biggest issue I have with it is the irrationality of the community. There is no certainty. There is no guarantees. I don't like the notion that something may change the world. All right, let me know when it's changing the world, and then I have interest. Until then, it's all speculation, conjecture, hypotheses, so on and so forth. Same thing with Hex. The only thing I dislike is the community. Otherwise, it's a trivial contract. It's a simple contract that has a shitload of memeage and marketing. And that's half of these projects. That's half the complexity is memeage and marketing and convincing others that there's merit. And that's it. I mean, that's the whole reason the dollar has its value is just every schmuck out there thinks it has value. Every schmuck at a convenience store says, yeah, I want them dollars. Give me dollars. I mean, so that's why it has value. All it is a shared belief system. That's all value is. That's all it is. Fundamental value. It's all consensus driven. Everything is consensus. I agree this has a certain amount of value. You say, oh, no, I think it's about a little bit less. And that's like, what an auction is or a deal. Like an item. Think of an item. Like my little statue here. I bought it for $10. You want to buy it? All right. The person says, I'll give you 8. How about 8.50? The agreed upon value of the object is $8.50. Agreed upon value, consensus. It's the same thing with dollars, except the dollar is a fixed unit of account, so it's one. So that doesn't vary. What varies? The price of the thing, the price of the item in the convenience store, the price of the car, not the fixed unit of account. It's a common denominator. Actually, it's a quite ingenious solution from a historical standpoint. But that's how we value things. The fixed unit account currencies flipped it on its head, where the value of the asset didn't fluctuate, but the value of what it could purchase fluctuated. Noah, amateur's question incoming. MIM purchasable somewhere feels like you can only earn it. Earning 139% spell right now on a farm, which is very cool. Well, MIM is purchasable from everywhere, meaning Uniswap or Sushi Swap. So, a lot of what we do on this stream is redefine things. These are predominantly called exchanges or dexes, but it's also a purchase or a sale. And notice how Curve talks about it. Sell. So you're able to sell USDT to buy USDC. So a lot of what we deal with is semantics and just redefining the stuff that we already know, just using different words. I think this is the best example, Killis. Sell. And when you're over here, you're selling Ethereum to buy Spell. Or you're selling, I don't know, selling Ethereum to buy WBTC. So on and so forth. Semantics. Austin, do you think DYDX is really decentralized? Of course not. It's useless. It doesn't do anything. Well, no, the protocol is cool, but I thought you were referring to the asset itself. It's a useless asset. It doesn't have any productive value. If I received that, I would have liquidated it immediately. But I didn't receive any because I'm a U.S. citizen and my government protected me from, like $150,000. So thank you, government. I read that it doesn't let you transact directly with the contract and all their transactions are cleared on their private server. Possibly. I do not know. I'm not a fan of trading. I don't trade. I'm a capital allocator. I allocate value for rational time horizons and for, good reasons. Long term. Or maybe short term. I got no qualm with reallocating capital. And we've done that plenty of times. We played Matic pretty hard. I've had plenty of different assets over the years. And that's based on an opportunity cost analysis where you're reallocating capital from an underperforming asset to an outperforming asset, depending on the narrative as it changes and evolves. Creative, CVX, CRV, XSushi, FTX, FXS. It's a heck of a set of a couple of assets. Anything cheaper? Um, I don't know what if cheaper is the best way to think about it. But those are volatile assets, so if you're thinking about a capital allocation, but be prepared for volatility, especially in market conditions like this. Let's see how curve looks. Here's the complexity with curve. It's like right on the line below the 50 SMA on the daily, but this is what has me just hopefully excited. You see this? That's the 200 SMA and the 50 SMA. When the 50 SMA crosses the 200 SMA, that's a golden cross. And that is a heck of a confirmation of bullishness on a day where the S&P looks like it does and the markets are afraid. Curve is on the verge of a bullish cross on the daily. Now, if you want to zoom out a little bit, you can see the last time the fifth. So this is a brand new asset in many regards. It's less than 2 years old. So the 50 SMA probably crossed the 200 SMA somewhere. 1 second. Somewhere around here. And and that was pretty bullish. It went from $1.30 to 230 and eventually came down, but it didn't have a bearish cross. The bearish cross came over here on June 29th, and it went all the way up to 4.6. So it went from $1.30 to $4 with that bullish cross. Now, if this bullish cross, which is right here, does anything similar, it's going to break out of this triangular compression. And that's where different technicals play in, like the Fibonacci extension and just maybe price discovery. It's like, what the hell is this thing worth? When this breaks this red line, it's going to be quite meaningful. This is the entire history of the curve asset since it was launched. Jay Powell just said they have no intention to ban crypto. Yeah, I don't know what's going to play out with regard to regulation, but even if they banned it, this is where my capital belongs, so I might have to question what to do and what do I have to do and what choices I have, because this is where my capital belongs. It's not up to them. It's not their choice. Fubear, Noah, have you done shows about the implications of if DeFi succeeds and disintermediating the existing banking system, World Bank, sovereign? I have not. That's a very complicated topic. Not that I'm an expert, but you know, it's not going to disintermediate sovereigns. They have totalitarian control. They might not be totalitarian governments, and like the U.S. versus China governments, for example, but they're totalitarian, and then they're not giving up control. Different style of government, but they're not giving it up. I have no idea what happens with the World Bank and the BIS. These are very complicated systems that are beyond the general public's knowledge entirely how they operate. A lot of it's speculation. Daniel, can you talk more about BlockFi? What do you mean by taxes? Oh, so when you spend money on a credit card, uh, well, it's easy because it's dollars. So I take a salary from crypto and I deposit it into a bank account, and everything that I do that with is I have to pay income tax. I'm taking a salary out of my business, and that's taxable income. Whereas if you pay with like a crypto.com DeFi card or a crypto credit card where you're putting stable coins and you're paying directly from stable coins, you have to manage accounting and your books, whereas deposits into a bank account are much easier to manage in my mind. Austin, do you ever feel bad when you miss out on something that you thought was a good investment but didn't pull the trigger? No. You can't own everything you want to own, and it's okay not to make as much money as possible. I had a couple of opportunities to make probably double the portfolio, or I could have easily sold um, curve here at $4, and it would have been, and then I could have bought down here at the bottom. Then I could have sold up here, and I could have bought down here. Don't worry about the shit that didn't happen. Worry about where you are in the shit that can happen. S, hey Noah, thanks for these chats. Their class. You got it. I'm trying to understand the hyperinflation of ohm at the moment. Do you understand the value proposition? Well, the value prop is treasury creation. How it plays out from a monetary policy is pretty obvious. It's hyperinflationary, so it's a debasing asset as well as a rebasing asset. So, arguably, um, as long as adoption is greater than inflation, the price is going to appreciate. But considering the inflation rate, we expect sales, we expect people to pursue capital gains. But the inflation rate should outperform the deflationary pressure of liquidation over enough time. And I've seen calculations where like time could be get hit 90% to the downside, and with the inflation rate, and 6 months you're still in profit. So that's pretty interesting. What we have here with ohm is an experimental monetary policy that's quite intriguing. I don't own it. It's okay not to own everything you want to own. Do I want to be exposed to it? Sure. Do I have the extra capital to be exposed to it? No. Well, you know what I find interesting? Olympus Dow, their bonds as a service, the Olympus Pro, I think there's a huge amount of potential for Olympus's services and protocol functionality to spread across the crypto space. I mean, we're talking about bonds, and as an abstract concept deployed in the crypto space, that's downright fascinating from a conceptual standpoint. And that's going to allow protocols to build treasuries and to own their liquidity, or to own whatever asset they want and to accumulate a treasury. We're literally witnessing protocols build treasuries. And that is a freaking crazy concept. That is surreal in many regards. Luke, hey boss, how do you manage stress at work? Feeling a bit overwhelmed with my 9 to 5? Well, stress is not easy, and work is not easy. I don't have the answers to that, my friend. All I know is I am stressed as well. I've had to make significant changes over the last couple months. And I finally found myself as of probably this week. Today's Thursday. As of Monday, I found myself in a decent position mentally. I found myself in a sustainable position where I'm okay and I'm comfortable moving forward. And I have things under control more or less. It's not easy. So I appreciate the complexity you have there. We need to work. We need a 9 to 5 because that's how you pay bills. And the only opportunity we have for freedom is to take some of that money, some of those savings, and deploy them in intelligent, well thought out ways. And you're good with your bills, you're good with your mortgage, you're good with your car payments, you're good with everything because you work. And if you lose a job, you get another job. So there's plenty of work out there. That, if anything, there's a work employment shortage in the country. So there's always work. You can always trade time for money. So we should all be good with regard to our bills and living and being able to take care of our families and all that shit. So everything that we talk about really is what's more than that, what's better than that. And that's financial freedom, where you don't have to work to take care of your family. You work because you want to work. So we're talking about really luxuries in many regards. So I work myself, so I understand how you feel. Find your peace and know your future and prepare and plan for it the best you can. Dylan, the impermanent loss has been fine so far. Orca trends with Sol and has held well, but certainly have to watch it. Yeah, double volatile LP positions, baby. Alex, there's a lot more people in these chats than a few weeks ago. Yeah, I've had big numbers, 66 people in the stream right now. Love each and every one of you. Prince, Noah, you used to mention wanting to maintain proportional ownership of Curve transaction fees via CVXCRV. Now you say you have the quantity you want. What changed? Well, I'm accumulating a treasury, so to speak. If I'm operating as a business, I need cash reserves. What happens if the market deflates significantly and then I have an opportunity to buy more CVXCRV? Um, I have a very large quantity, and considering my portfolio balance, I don't want it to be too heavy in one asset, and I have a good quantity. Nothing changed, um, but proportional ownership I don't think is necessary considering. I guess that is something that changed. I used to think that, but I believe that the protocol and the entire industry, the entire crypto industry, is so early that you could have a fraction of the portfolio that I have and still do very well in the coming years. And that's generally the sentiment I have. Um, I expect I expect all these markets to be multiples in 4 years. Multiples. Like real serious multiples 4 years from now. Ha! Shit's gonna be crazy. So, but bear in mind, between now and 4 years, market could get hit really bad. So be prepared, and watch $1 million turn into $300,000. Not look at it. What does that mean? But that money's still working. It's still working, and it'll be working for years, producing income for years. And then when it all reinflates, all that value reinflates with it. That's an interesting reality. Um, Popsicle is an automatic liquidity provisioner where they take capital and they're able to reallocate it to various LP positions to maximize yield. It's basically an automatic money manager. Dylan, Orca, Trader Joe, Absol, Polychain, Sino, all that fancy shit. A quarter bill. What the fuck? ICD, I'm sure you talked about before. Well, there's your popsicle answer. Dylan, second biggest DEX. Yay. Volatile asset, still volatile. Maybe the market gets hit. Orca's going to take a shit. CS, I'm not sure if you heard of Cake DeFi, got some vested in their LTC DFI liquidity pool. Any comments? Well, that sure as hell is a double volatile pair. Is that Litecoin? And there's double volatile pair LP position. Expect serious volatility in the price action of the principal components. Joe, I'm going to get some sweet DND hamster NFTs. Oh, that sounds cool. Not necessarily to make money, but because they're cute, and I want little damn hamsters with weapons and armor. Of course. You guys know I got my NFT collection, so it's all good. Enjoy a little bit. But don't buy it because you think you're going to make a fortune. Buy it because you want it. Buy it because you buy some little statue, okay? Thanks for the great answer to my question. Got another one. What's the best strategy for tax avoidance? There's no such thing as tax avoidance. There's just tax management. I prefer to focus my entire portfolio on income rather than capital gains. Um, I take capital out of the crypto space as income to my personal banking account, and I consider it a salary from a business. And I pay income tax on my salary, if that helps at all. Teddy Biz, hey Noah, new sub here. Do you have the bulk of your capital in Curve and Convex on the Ethereum network or Polygon or elsewhere? Well, I'll tell you the percentages. I'm pretty sure someone asked me at least once per stream my percentages. Curve is currently 47.96% of the portfolio, and that's a combination of old school VECRV as well as CVXCRV. Hope that helps. Dan, read the IRA. Do you still have yours, or did you pour it into crypto? I still have my IRA. In fact, my Roth IRA is all gold miners, Barrick and all those boys, bunch of gold miners and wheat and precious metals and so on and so forth. CS XLM seems to run along with XRP. I got more XLM than XRP. Should I swap them for XRP? Wrong person to answer. I would have neither one of those assets. Alex, Spell is holding up so much better than the most. Oh yeah. Yes, it is. Because it's fucking Spell. Is that the most ridiculous platform there is? I mean, constant buy pressure from debt interest payments. Oh my God. That's the coolest damn platform I could possibly think of right now. Hence my position size. Killis, a pleasure. Yeah, protecting. We've been through a lot, Killis. You've been on this stream a while. We've seen a lot of shit. Fife, did you make an S corp or is that not necessary? Sole proprietorship, baby. I don't think any of that corporate structure is necessary except from a liability standpoint. All you need to do is think of yourself as a business, and you are a business. I mean, did you know that things are automatically copyright, and the only reason you need a copy to file and register for copyright is for enforcement purposes? Otherwise, things are inherently copyright. So I'm inherently a damn business, and no one's going to tell me anything else. Noah Simon Incorporated, yes. Daniel, you're very welcome. S. Okay, I'm going to wrap this up. You guys got so many questions. I like this. It's fun, but shit, I got some work to do, boys and girls. Dylan, sorry, didn't mean to harp on it. Just wanted to explain my logic. Always, it's all good. It's all good. Double volatile LP position. That's where it fits into my categories. Caleb, what do you see for the future of Spell? Well, it's a very specific asset in a very complicated market, but I see Spell good. Spell nice. Noah likes Spell. I got my crystal ball. It's an awesome asset, though. And the devs are awesome. Just very impressive. Fubear, are there any hedging instruments for LPers in DeFi? I would opt for just a stablecoin paired LP position. And that is a great way to hedge downside on a volatile asset. WBTC paired with USDT is going to be dollar stabilized Bitcoin, converting the risk of Bitcoin exposure into a revenue stream. Food for thought. On Moon River, there's an NFT platform for Zombies, giving 2 free NFTs every 12 to 18 hours. I'll stick with my fast food punks. Thank you. Fifth Element, do you pay taxes if you borrow stablecoins? No. Any debt is not taxable. No, you do not, even if you transfer them to a bank account. Creative, North Cyprus. Oh my God, so cool. Can you walk into a currency exchange and pay 3.5% and tax for every withdrawal, plus no capital gain? No capital gains. What are we living in a prison environment in the States? These boys want to tax your kidney if they could. Farmer, those assets need to earn their keep. Damn right they need to earn their keep. Assets got to work for you. If they're not working for you, they're not an asset. They're not a friendly asset, not a good asset. Isn't that the most meaningful characteristic of an asset? If it's working for you, what good is an asset if it does nothing for you? Oh my God. Let's wrap this up, boys and girls. Thursday, September 30th at 3:05 p.m. Always a pleasure. I wish everyone a wonderful day. Tell everyone to subscribe. After party on Discord. Ask Fit. I got something new I'm going to put together. Well, it doesn't refresh very nicely. Some good subscribers lately, so thank you, everyone. I'll pop the URL in the stream if anyone's interested in some additional videos. But as I said, I wish you all a wonderful day, and I will see you all tomorrow. Peace.